Hello everyone, welcome back to the channel. Today is a special one because this is officially our very first gold analyze video on this channel. I'm excited to start covering XAUUSD together, and if you enjoy this type of content, make sure to become part of our growing community by liking the video, subscribing to the channel, and turning on notifications so you don't miss our upcoming market updates. Now, let's begin with the higher time frame perspective, starting from a weekly chart on gold. As you can see here on the chart, the market spent a long period in accumulation, roughly from April 2025 up to August 2025. Price was moving within a range and building a position without any major expansion. After that accumulation phase, the market delivered a very strong impulsive move to the upside for almost 8 weeks, yeah, which is approximately 2 months, yeah. Gold expands aggressively though. So price moved from around the 3,300 region towards the 4,300 area, creating a very strong bullish expansion. Following that major move, the market delivered a healthy pullback for around 2 weeks, retracing back towards the 3,800 regions. But instead of reversing the trend, buyers stepped back into the market and continued pushing the price higher. So from that point, gold delivered another strong expansion and moved towards the 5,600 regions. It created another significant bullish leg. Now after that move, the market begins retracing again. As we can see here, price pulled back towards the 4,100 area and saw liquidity resting below the previous structures. What becomes interesting here is that the market reacted around a previous pullback regions and it begins printing indecisions on the weekly chart. Yeah, right now the market is still trading around that indecision area. So from my perspective, the market may already have captured enough liquidity from the downside. Because of that, I currently do not expect the price to continue deeply towards the 4,100 regions again. Instead, I'm leaning more towards a bullish continuation in the long run pictures. Okay. However, one thing is always important to remember: the market is never guaranteed. We do not predict with a certainty. We work with probabilities and scenarios. Okay. For now, my expectation is that the market may continue respecting the law of this indecision structure and potentially continue pushing higher towards a new all-time highs in the long term. That's my weekly perspective on gold. Now let's move down to the next time frame and see what the market structure is showing us. Okay. Now let's move into the daily chart on gold and take a closer look at the overall structure. As we discussed from the weekly perspective, gold delivered a very strong bullish expansion moving from around 3,300 area towards the 4,300 regions, approximately 1,000 pips move, I think. After such a strong expansion, the market started delivering a correction and retraced back towards the 3,800 regions, which was the same area we discussed earlier from the weekly pullback structure. Yeah. So after reaching that zone, the market started showing signs of strength again. We saw a further swing and then a market structural shift with a strong displacement from buyers. Price moved aggressively and continuing that expanding for a long period of time before coming back into its order block area. After coming back to its order block area, price reacted there. The market created another failure swing, delivered another market structural shift, and continued its high bullish movement towards the all-time high regions around 5,600 area. Now, look at the current market structure. Gold has entered another corrective phase. As you can see here, the market came back in reacted around the previous price swing order block near the 4,100 area. After touching that zone, bearish stable back in the market started another upward move. During that moment, price was also building a liquidity along the way, as you can see here. And now the market has started correcting into those liquidity areas while moving back towards an important daily key zone around this 4,500 area. This level becomes very important because it has already proven itself in the past, as you can see here, as you can see on the chart. It acted as a resistance previously, rejected price, and after being broken later, it started acting as a support. So currently, the market is sitting around a significant decision area. Initially, I expected the market to hold above the daily market structure I shifted on. But now, looking at the recent daily candles, price has shown strong downside pressure and a deeper correction behaviors. Because of that, I am paying close attention to the possibility that price may continue lower and securities around the weekly confluence area, especially around the week equilibrium or 0.5 regions. If the market reaches that zone and starts bringing a clear bullish market structure shift with a strong confirmation, I will be looking for a potential continuation toward the upside. The upside target I am watching is around 5,050 areas, where we also have a daily inverted fair value gap there and daily order blocks. And if price reaches that area, it could become another important reaction point where we may potentially see a resistance surface again there. One more thing I'm watching carefully is many times when a strong daily candle close aggressively through the previous day's body, the next session often comes and sweeps the previous day's low before deciding its actual direction. Yeah. So I will be watching Mondays very carefully. If price simply sweeps the daily low and rejects strongly, that can support the bullish idea. Okay, but if price breaks deeply so the order block and creates a strong downside market structural shift, then we may need to reassess this bullish scenario. Okay, so for now, my daily outlook remains potential continuation lower into the weekly confluence zone or followed by the bullish confirmation, possibly the price move towards the 5,050 regions. That's my daily perspective on gold. I will be waiting the confirmation to take the trades in lower time frame. So let us see lower time frames in 4 hour. Now, let us move down to the 4 hour chart on gold and look at the medium term structure, okay? As you can see here, price reacted strongly around the 4,800 regions, which is a very important key level. Why is this level important? Because this area has already shown a strong reaction in the past. It previously acted as a resistance and later served as a support. So, when a market reacts multiple times around the same area, it becomes a level worth buying attention to, okay? As you can see here on the chart, price touched this key level and started moving to the downside. So currently, we can say the market is reacting from a significant area, not only from this key level itself, but also from a higher time frame structure, including the weekly and decision areas and the daily order blocks we discussed earlier. Okay. Now, after the rejection, the market with liquidity and created a very clean dealing range. Okay. And as we know, a dealing range often helps us identify important areas of interest and possible order blocks. For this dealing range, price left us a clear order blocks. And currently the market is trading around that 4-hour order block areas. However, this is something important we discussed earlier. We were paying attention to the daily candle close in. The daily candle closed strongly below the previous candle body. That shows a stronger downside pressure. Okay, so because of that, there is a possibility that the market may not fully respect this current order block, and instead of delivering a deeper retracement. If that happens, then my next area of interest remains around the weekly weak equilibrium or weekly 0.5 region that we discussed earlier. Now the market is sitting at a decision point. If we see a clean market structural shift or a strong bullish confirmation from this area, then I would be interested in looking for buying opportunities. But there is something I want you to remember because this is important. Whenever the market creates another dream range where retracing into the order block, many times price can continue making a deeper retracement into the lower part of that structure before the actual move begins. Okay, so as you can see here, price created another leading range while moving towards this area, which increases the possibility of a deeper move into this order block zone. Now, looking around this 4,500 area, this remains another important key level because it previously acted as a reaction point and could again become an area where buyers and sellers fight for a control. So my overall 4-hour outlook is simple. If the market gives us a clean confirmation in a bullish structure from this area, I will be interested in long opportunities. But if price disrespects the order block and continues pushing lower, then I'll be continue watching the weekly weak equilibrium area before looking for the buy setups. Okay. And by the way, I also took a short trade during this move. After liquidity was taken, the market created a clean dealing range and gave a confirmation for a short position. I entered around the 4,700 regions and targeted the 4-hour order blocks around 4,580 zone. The setup delivered approximately a 1-to-7 risk reward ratio opportunity. I will show you the exact setup and execution on the 50-minute time frame. So now let's drop down into the lower time frame and see what the market is doing, okay? Okay, now finally let's move into the 50-minute chart and look at the execution side of the setup, okay? For me personally, one of my strongest confirmation is the dealing range. It is one of the concepts I try to study the most because it helps me to understand the market intention and structure more much clearly, okay? As you can see here, the market formed a very clean dealing range on the 50-minute time frame. And this dealing range was actually created while the price was retracing towards the 4-hour order block that we discussed earlier. By the way, one thing about my trading approach, I'm not the type of trader who takes 10 trades every week. Most of the time, I may only take one or more 2 trades, and only if the setup is very clear. I don't chase the market. I don't force entries. I wait for opportunities that fit my plan, okay? I wait for the market to become to that my interest area, and then I look for a confirmation before taking any type of trades. Okay, now back to the chart and see, as you can see here, the market shows liquidity around the 4,700 area. After taking that liquidity, price created the dealing range we discussed before. Once that dealing range formed, I stayed identify my execution zone. We already had a clear 4-hour order block acting as our higher time frame point of interest, yeah. But I didn't take the trade aggressively because the price reached this order block, okay? I waited for a lower time frame confirmation. On Tuesday, the market touched the order block but I stayed patient. Price started consolidating, then swept internal liquidity to the upside and external range liquidity here to the downside. It's giving us a clear daily range. That became my confirmation. So after that confirmation formed, I waited for the price to retrace back into the 50-minute order block area. Then price come back into this my zone, and that was the setup I was waiting for. That was where I entered my short positions. My target was the 4-hour daily range order block around here, the 4,500 regions and this K level. So that trade delivered approximately 1 to 7 risk to reward ratio, as you look at here. Now, looking at the current market conditions, price is ranging and accommodating around this area. This area is, as we talked before, the 4-hour daily range or the block area. So from here, I'm watching two possible scenarios. The first scenario is the market give us another clean daily range and bullish confirmation from this K level, which can provide a potential buying opportunities. Second scenario is price disrespects this current structure and continues lower towards the weekly conference area we discussed earlier. So for now, I am remaining patient and letting the market provide confirmations before making a decision. And one important thing I want to leave you with is that there are many types of interest and many different styles of confirmation in trading. So today I am simply sharing the concept and approach that I personally use. No matter what strategy you follow, never rush a trade, okay? A trade shall have 1. A clean point of interest. 2. A clear confirmation. It must have a clear confirmation. 3. There must have a reason to take that trade. Okay, you must have a clear reason to take a trade. The market has been here for a decades, and it will continue to be here. Yeah, opportunities will come again. But if you damage your account by forcing a trade, that becomes much harder to recover. So stay patient, stay disciplined, and think like a professional trader. That's my overall goal outlook for today. If you have a question, leave them in the comment section. Thank you for watching, and I will be continue sharing updates and future trades with you. Make sure to like the video, subscribe to the channel, and become a part of this amazing journey. See you in the next video. Thank you. Bye.